Welcome to our channel, where we unlock paths to wealth and success. Let's grow rich together. Imagine waking up in a world where the US dollar no longer reigns supreme. Does it sound far-fetched? Maybe not as much as you'd think. Over the past decade, signs of a shifting global financial order have grown stronger. Nations are breaking free from dollar dependency, exploring alternatives, and reshaping the financial landscape. But why is this happening? And what does it mean for you, for businesses, and for the global economy? From 2016 to 2024, the share of global central bank reserves held in US dollars dropped from 65% to 54%, according to IMF data, highlighting a significant shift in global financial dynamics as nations diversify their reserves. Key agreements like China and Argentina's 2024 deal to settle trade in yuan and Saudi Arabia's exploration of yuan-based oil sales highlight the growing trend of de-dollarization. Yet, despite these shifts, the dollar's dominance remains rooted in history, trust, and structural advantages. The dollar's global dominance didn't happen overnight. It was forged in the aftermath of World War II, with the Bretton Woods Agreement of 1944 establishing the dollar as the cornerstone of the global financial system. Even after the U.S. abandoned the gold standard in 1971, the dollar's unmatched liquidity, trust, and role as a safe haven currency solidified its position. In 2024, the dollar still accounted for over 85% of foreign exchange transactions. During the energy market shocks of early 2024, global investors turned to dollar-backed assets as a refuge, underscoring its enduring appeal. For better or worse, the dollar remains deeply entrenched in the world's economic engine. But can the dollar hold on to its dominance forever? Let's look at the competitors that are challenging its throne. 1. Chinese yuan. Beijing's strategic push for yuan internationalization is paying off. With over 140 countries participating in its Belt and Road Initiative, BRI, China has actively promoted yuan-based trade agreements. Saudi Arabia's openness to accepting yuan for oil payments in 2024 marked a watershed moment, showcasing the yuan's growing role in global energy markets. 2nd, euro. As the second most traded currency, the euro remains a powerful contender. The European Central Bank, ECB, launched the digital euro in late 2024, simplifying cross-border payments and enhancing confidence in the currency. In 2025, key energy deals priced in euros signaled a shift in global trade dynamics. 3. Alternative payment systems. Nations like Russia and China have developed platforms like CIPS and SPFS to bypass SWIFT, reducing dependency on the dollar-dominated system. Cryptocurrencies and central bank digital currencies, CBDCs, are further diversifying global payment options, with China's digital yuan gaining traction in international trade. The shift away from the dollar isn't just a matter of economic preference. It's deeply rooted in geopolitics and national interests. U.S. sanctions. Countries like Russia and Iran have faced extensive sanctions, prompting them to seek dollar alternatives to shield their economies. Trade dynamics. Emerging markets are seeking independence by trading in local currencies, reducing their reliance on the dollar. Financial sovereignty. The dominance of the dollar, and by extension U.S. monetary policy, limits other nations' economic autonomy. The push for de-dollarization reflects a broader desire for multipolarity in the global economy. What this means for you and the global economy. De-dollarization has far-reaching implications for individuals, businesses, and nations. For individuals, currency fluctuations may impact savings and international transactions. Diversifying personal investments can help mitigate risks. For businesses, multinational companies must adapt to a multi-currency world where supply chains and trade agreements increasingly rely on non-dollar settlements. For nations, economies embracing de-dollarization face both opportunities and challenges. Pakistan's 2024 adoption of yuan-based trade settlements is a prime example. It reduced reliance on the dollar, but required significant adjustments to trade mechanisms. The shifting financial order isn't just a challenge, it's an opportunity. Here's how investors can capitalize on this transformation. 1. Diversification. Expanding currency holdings beyond the dollar can hedge risks and tap into emerging markets. The yuan, euro, and even currencies like the Indian rupee or Brazilian real offer growth potential as their respective economies expand their global influence. 2. Commodities. As dollar weakness boosts commodity prices, assets like gold and oil become more attractive. Gold's 12% surge in early 2024 highlights its value as a safe haven asset during economic uncertainty. Third, regional markets. Southeast Asia, supported by trade agreements like RCEP, is becoming a hub for growth industries like renewable energy and digital infrastructure. Investing in these markets allows for exposure to dynamic, rapidly developing economies. The global financial system is evolving, and the dollar is no longer the dominant force it once was. While it remains a cornerstone, a multi-currency future is taking shape. This transition brings volatility, but for those who stay informed and adaptable, it opens up unparalleled opportunities. The question isn't whether change is coming, it's whether you're ready to seize the moment. Are you prepared to navigate and thrive in a multipolar financial world?